Okay, if you've bought anything online in the last, say, year, you have definitely seen it. That tempting little button at checkout that says you can split your purchase into 4 easy, interest-free payments. It kind of feels like magic money, right? Suddenly, that new pair of shoes or that gadget you've been eyeing feels way more affordable. But what is actually going on behind that button? Let's dig in.
I mean, you see it literally everywhere. Pay in 4. You get your stuff right away, but you pay for it over time and with 0 interest. It's presented as this super simple, helpful tool. But as these services have just exploded in popularity, a really important question comes up. Who is this gift really for? Is it for you, the shopper, or is there a hidden cost to all this convenience?
And let me be clear, this is not some small niche corner of the internet. We're talking about a massive $215 billion global industry. To put that in perspective, that's bigger than the entire economy of some countries. So yeah, this payment method has totally changed the game for how we shop, and figuring out how it really works is more important than ever.
All right, so let's pull back the curtain and look at the actual mechanics. How does this system take one single purchase and almost instantly turn it into a series of small, super manageable payments?
At its core, Buy Now, Pay Later, or BNPL for short, is pretty much exactly what it sounds like. It's a short-term loan. You get the product right away, and a BNPL company, like Klarna or a firm, pays the store for you. You then pay that company back over a set period of time. It's designed to be simple, fast, and that is a huge part of its appeal. And the process itself is just incredibly smooth. You choose the BNPL option at checkout, you get approved in seconds, usually with what's called a soft credit check so it doesn't hurt your score. You put down that first 25% and you're done. The rest of the payments are usually auto-billed right from your debit card every couple of weeks. It's a completely frictionless experience, and that's the whole point.
But this brings us to the multi-billion-dollar question, right? If you, the customer, are paying 0 interest, and these BNPL companies are obviously in business to make a profit, where is all that money coming from?
Well, the answer might surprise you. The retailer pays, and they pay a lot. A typical credit card transaction might cost a store about 2.5% to 3.5% in fees, but BNPL providers, they charge them anywhere from 4% to 6%. That is a huge difference. We're talking nearly double the cost.
Which, of course, leads to the next logical question. Why on earth would any business volunteer to pay almost twice as much for a transaction? I mean, it seems totally backward, but the answer is all about our own shopping psychology.
So here's the first reason. Stores see a massive jump, up to 30% in what they call conversion rates. In plain English, that means way fewer people get to the checkout and then leave without buying anything. That little moment of hesitation you feel before clicking Confirm Purchase, it kind of just melts away when the big price tag is broken down into smaller, more digestible chunks.
And here's the other side of that coin. Not only do more people buy, but they buy more. The average amount people spend can skyrocket by up to 40%. Suddenly, that $80 sweater you were on the fence about becomes a total no-brainer when it's just 4 easy payments of $20. So for the retailers, that higher fee, well, it starts to look like a pretty smart investment.
Okay, so it's a clear win for the retailer. But what about for you, the consumer? That seamless, easy experience is designed to feel fantastic, but it can also hide some very real risks. Consumer protection groups are really starting to sound the alarm about what happens when easy credit becomes a little too easy.
There are really 3 main things you need to watch out for. First is this danger of getting overextended through something called loan stacking. That's when you take out a bunch of small loans from different BNPL providers, and before you know it, you've lost track of how much you actually owe. Second, these companies are collecting tons of data on your spending habits to get you to buy even more. And finally, you've got the late fees and tricky return policies that are often buried in the fine print. And the risk of those fees isn't just a what-if scenario. Data from the Consumer Financial Protection Bureau shows a really clear trend. The number of users getting hit with at least one late fee is going up. And since most of these services use autopay from your bank account, a late fee is a pretty good sign that there just wasn't enough money in the account to cover the payment.
And this brings us to a really critical point, which is perfectly said by consumer advocate Julia Xina. This isn't just about the mechanics of a loan or a few fees. It's about whether BNPL actually helps us build healthy financial habits or if it just lures us into a cycle of buy now and regret it later.
Now, because of all these growing concerns, the whole buy now, pay later world is really at a turning point. The old days of these companies acting more like tech platforms than actual lenders, well,
those days are coming to an end.
The whole landscape is shifting, and fast. Starting in 2025, new rules are coming that will force BNPL providers to act more like traditional lenders. This means they'll have to do better checks to see if you can actually afford the loan, and this is a big one. They'll have to report your payment history to credit bureaus. So, paying on time could help your credit score, but missing payments will definitely drag it down. And on top of all that, major banks are jumping into the game with their own BNPL options, which is really heating up the competition.
Okay, so we've looked at how it works, who it's really for, and where it's all going. So that brings us to the final and maybe most important question. Is this a financial tool you should actually use?
Look, on one hand, the appeal is obvious. You get what you want right now with zero interest and a really simple payment schedule. It's credit, but made easy. On the other hand, the risks are just as real. The entire system is built to make you overspend. You've got the risk of late fees and, very soon, damage to your credit score. And even simple things like returning an item can become a huge headache when there's a third company involved in the transaction.
Ultimately, I think it all comes down to this. Buy now, pay later is a powerful tool, one that's been meticulously designed to remove every single obstacle between you and a purchase. There is no question it makes buying easier. But as you're standing there at that digital checkout, the real question you have to ask yourself is, does it make your financial life better? And as we've seen, the answer to that is not so simple.